So we get a little meeting that entrepreneurs do every Wednesday mornings. I just got back from it, and they were talking about the Silicon Valley Bank, SVB. Dun, dun, dun. And I figured since not only have I worked at a bunch of banks, but I also went through a lawsuit with one, that I would talk a little bit about banks and banking. Most of the time when you hear about banks and banking failures, it's just fraud. It's not hard. It's just they lied. It's really just that simple. I know everybody wants complicated explanation. You go into 2008 banking crisis and you could say, oh, look at the big short and the tranches, and it's all lies. No, really, I'm not saying those things weren't there. I'm saying they didn't cause the problem. What caused the problem is banks lied. They lied. That's all. And don't believe me? Go to Wikipedia. Look up Taylor, Bean, and Whitaker. Every bank was doing what Taylor, Bean, and Whitaker was doing. That's not the mystery. The mystery is, how did Taylor, Bean, and Whitaker get away with what they were doing for so long? Something's rotten. In my case, took my house. They never owned my house. They never had a piece of paper with my signature on it. Nothing. Which is required to go to court, by the way, in most states for a foreclosure. They didn't have it. The courts didn't care. Eventually, they just lied to the court about a letter that they had with my signature on it that said that I knew that they owned the paper, which is A, not legal standard, B, irrelevant, and C, a lie, because they didn't have such paper. The paperwork that was filed actually from their attorney at the time, which was 2011 maybe, said they did not now, nor would they ever have the paperwork. They said that to me. Right? The courts ignored it. They ignored all of it. I don't know why we go into psychology of what you believe the federal government wants you to do at the local level in such a case. The 2008 financial crisis took really 10 years to unfold. They were still doing foreclosures in 2018. So from 2008, in my case, my lawsuit was 5 years. So, and it started in 2011 or 2012, one of the two. So these things take a long time to unfold, but the bottom line is the banks are usually lying. That's all. It's not hard. They're just making up what they own and what they don't own. And I was talking to a finance guy at the local university down here, and he said, yeah, you're supposed to have a certain number of people per $1 billion that you have, in your risk management. And it's a ridiculous number of people, by the way, but they had like a third of the number of people needed to manage risk from a financial perspective, according to him, which again, I thought was interesting. I think with these banks, a lot of this fractional reserve banking stuff, look, there's something to it, but a lot of it's overrated. Your capital is usually in play. And when you don't use banks, it gets better. You may say, oh, you can't avoid using banks. Yes, you can. Use credit unions. Or if you're in the UK, you can use building organizations there. I forget what they're called exactly. But yeah, so they're the equivalent of credit unions. So there's alternatives to banks that aren't profit driven, like credit unions or nonprofits. So don't bitch about the banks. Change where your money is. It's not that hard. Credit unions don't go under because they don't outsource their business. All the deposits are in somebody else's mortgage locally. So because they don't spread the risk around and hide it, right? Because the further away you get from something, the more fraud there is, just automatically. And not just fraud, but mistakes. Like the more people in the chain, the more mistakes are going to be made. When you have these long chains of foreign banks and mortgage systems going through servicers and on and on and on, what happens is more mistakes are made, more paperwork is missed, and more fraud happens. It just is what it is. When you've got a mortgage broker selling to any one of 5 or 6 different mortgage servicers who are selling that to a bank in the form of a loan, right? That's too many people. Just go to your credit union. They'll give you a loan with them. And then it's one bank, one mortgage servicer, one mortgage broker, one everything. Like, it's just all in one place. It's that simple. When you don't make the thing too complicated or too complex, you don't have as many problems. And that happens in software. I talk about that a lot on this particular channel. That happens in software all the time. You make it too complex and boom, you have too many problems. You do more releases, you get more bugs. You have more complicated banking systems, you get more fraud. And you can look at The Big Short and you can say, oh, look at all that was going on. The thing you probably missed if you watched The Big Short was they said on more than one occasion, who's on the other side of our trade? In other words, if you're betting against fraud, there's no money there. They don't have it, right? So if that's your bet, you're both going to lose. And some of them did, by the way. If you pay attention carefully to the movie, some of them did. None of them got the full valuation of the bet that they made. None of them. Because the money wasn't there. It was never there, ever. There was no point in time when that money was there. It didn't exist. It was pure fraud, right? It was pure fraud. I did hundreds of hours of legal research for my lawsuit. Hundreds. There was a guy in Kentucky foreclosed on during the mortgage crisis. Paid cash for his house. Paid cash for his house. There was no bank loan on his property. Foreclosed on. Took him 3 years to resolve it. 3 years in the courts. Something's rotten. You know, why would that take 3 years? You didn't have a note on the house with me. Bye-bye. See you later. 10-minute case. It's not hard. Did they do that? No, they didn't. They dragged my case on for 5. Same case. Same case. Oh, you have no paperwork whatsoever. I've never heard of you. You've never sent me a single piece of paperwork until you claimed that you could foreclose on my house. $500,000 gone. Gone. Gone overnight. Well, gone over 5 years. But yeah, for nothing. For people who didn't have any paperwork. And, you know, you can go back and look at the savings and loan scandal. Same scandal as 2008. Exactly the same. Identical. In fact, I read an article probably around 2012, maybe 2013. Guy claimed he was a regulator, banking regulator in somewhere in California. I think it was Orange County. It might have been some other county. He said the company called Countrywide Mortgage, which you may have heard of, had another name, that they were tied up in the savings and loan scandal, and that they just moved counties and changed their name to Countrywide and did the scam all over. That was his article. It was a Medium article, if I remember correctly. It's very old. I don't know if that's true. That was his claim. He claimed he was a regulator. He claimed he regulated that particular savings and loan, and he watched what happened, and they were out of his jurisdiction because they changed counties. It's just fraud. It's not hard. Yeah, we want to believe the banking system is this big stable thing, and people are no, they're not. No one's watching. No one's paying attention. People get sloppy. These things get too big, and then there's too much fraud. And look, any system has fraud, right? Like, there's fraud all over the place. That's not the problem. The problem is when there's too much, things collapse. That's the problem. When there's too much corruption, things collapse. It's not like there's systems with no corruption or no fraud. That doesn't happen, but it's not important. SVB is all fraud. Completely. It's not hard. I saw somebody post on LinkedIn. They said SVB was financially healthy. They had tripled their deposits every year from 2019 to 2021. Okay, well, what happened after 2021? Also, if you triple your deposits, but you quadruple your expenditures, who cares? Like, you can't measure one thing and know something about a system. You just can't, right? And people use this trick all the time. They'll do something like, they'll say, well, there's been a 20% increase. That doesn't tell you anything at all. At all. It's just not enough information to know anything about anything. right? It's not enough information. You need a lot more information. 20% of what number? 20% of $1. That's not a lot of money, right? So the fact that it went up 20% means nothing. And lots of investments have caps, hidden caps. So for example, you can say, oh, the stock of Google went up 20% in a day. Let's just suppose something like that would happen. Oh, well, you could have bought $1 billion. You can't buy $1 billion. that wouldn't happen, right? As you buy, the stock goes up, the price changes, your cost basis changes. You don't get the 20% on $1 billion. Even if you could buy $1 billion, there probably are $1 billion outstanding shares, so you can't even do it, right? And people don't realize that. They think things just scale infinitely. And if you bought one share and it went up 20%, you could have bought 10 shares and it would have gone up 20%. And I know cases where that's not true either. Like there's stocks that are thinly enough traded that buying 10 shares and buying one share won't get you the same price on all the shares. They're penny stocks or whatever, but that happens. And scale happens and it matters. And that's why the banking system is so fraudulent, because you can't look at it at scale. It's too big. You can't understand it. It's not possible, right? And so no one person understands this. And then more people can sneak in and corrupt and commit fraud and leech off the system and, rent seeking. Nassim Taleb's good explanation of rent seeking. Read all his books. They're great. And that's what's happened in the banking industry. We're going to see more of this as people scrutinize the banks, right? They've moved their attention. What are these banks actually doing, these investment banks in particular, with all of these risky portfolios? SVB had a bunch of portfolios of entrepreneurs with ideas who's were never going to monetize those ideas. Impossible to monetize. And you can say, oh, no, that never happened. It happened in 2000 with the tech crash. Happened in 2000. Everybody in the tech industry was saying literally the same thing. These businesses cannot ever, under any circumstances in the world, make money. Big bubble bursts. In fact, I know personally a bunch of people. Can't happen. I know these guys won't make any money. And then they went in at the top and they lost it all. Because the skepticism went away. They were like, oh, it must be able to make money. Everyone's investing. It's like, no, math is still math and it still works. And they lost faith in the math. And they lost their money in their investment. Math is still a thing. You can't get too caught up in the excitement of the day, because there's the excitement of the day and it's just too exciting for people, right? It's hard when you see enthusiasm and you want to be part of it, and then you put your money there instead of something else, right? So instead of calm head, rational thought. And look, I'm a consultant. I talked about this in a previous video, right? Success in some sense in the way you want it is probably not possible. And I've worked for many companies and I said, yeah, you can be out of business in 3 years for sure. But they paid me. I did my best. I got them as far as I could, and that's life. It's not going to be perfect. And sometimes it's not going to be good. And sometimes it's not going to be good enough. But you got to keep going. You can't just stop doing business with all banks because they're all corrupt and they're all, doing bad things. That's not going to work either. So it just is what it is. But expect more banks to collapse. And they said it in the little entrepreneurship meeting. Expect funding is going to be harder to get, because funding is going to be harder to get. Maybe that doesn't affect you, but that means fewer small businesses. And that's sad. But on the other hand, if you get a good idea, now's the time to strike. Labor's cheap. Good ideas are always good. And if you can make it work, it'll be great. So, don't fret the banking crisis. Just don't believe the complicated explanations. Math is math. They had more money going out than they had coming in. Deposits are not a way to run a bank. You have to have a successful investment portfolio on the back of your bank or you're screwed. It's actually, the deposits are supposed to benefit from the portfolio. That's where interest on deposits comes from. If they have a bad back end portfolio that's not making the money because they make bad investments, bad mortgages, whatever it is, the bank's not going to do well. So that's what to know. And don't panic, but don't believe. It's easy. Bad investments are bad investments. It's not that hard. And look, investments take a while to unfold. So 5 to 10 years sometimes more, right? Most companies fail within 3, but not all. It's risky stuff, and you got to know what your risk is. Manage your risk.